3.0 TV, stay connected with the world of blockchain. Stay up to date with infinite world of NFTs. Come explore and evolve with 3.0 TV in the metaverse.
So many coins, so much volatility. 3.0 TV delivers the news that matters.
Hello and a very warm welcome. I am Ruchi Sharma. Cryptocurrency markets were trading lower on Wednesday after the US Consumer Price Index for October came in flat versus expectations for a slight rise. The global crypto market cap decreased 1.8% to $1.38 trillion over the last 24 hours. IC15 index of top 15 cryptocurrencies was trading at 45,820 points, down by 1.78%. The CPI data revealed that inflation continues to ease in the country at 3.2% against the market expectation of 3.3% and down from September's 3.7%. The data many believe would prompt the Federal Reserve to pause the rate hike and could lead to cutting rates in the first half of 2024. The expectations drove investors to equities while triggering liquidation of cryptocurrencies. Bitcoin and Ethereum witnessed profit-taking after the United States Bureau of Labor Statistics released the October Consumer Price Index report. Bitcoin was at $35,917, down 1.96%. Bitcoin has rallied over 30% in the past month alone, making subsequent profit-taking an inevitability. After having doubled in 2023, partly on optimism that regulators will allow the first US exchange-traded funds investing directly in the token. Those gains stoked some caution about how much further Bitcoin can advance. Ether fell 3% to trade at $1,994. Last week, it gained $2,000 level for the first time since July on BlackRock's spot ETH exchange-traded fund filing. Binance BNB was trading at $246, lower by 0.4%. Cardano ADA was at $0.364, down 0.44% in the last 24 hours. Ripple's XRP token was down 3.5% at $0.635. Polygon's Matic was down by 1.65% at $0.8423. Solana SOL was up 8% at $59.2, adding over 36% over the past week. Doge, the popular meme coin, was down 1.9% at $0.073. Shiba Inu was down by 1.1%. That's all in Coin Monitor for now. This is me, Ruchi Sharma, signing off. Do like, share and subscribe to 3.0 TV, and for more information and stories, log on to our website www.3worldstv.io or scan the QR code. With 3.0 TV, stay connected with the world of blockchain. Stay up to date with infinite world of NFTs. Come explore and evolve with 3.0 TV in the metaverse.
So many coins, so much volatility. 3.0 TV delivers the news that matters.
The conflict between traditional regulatory frameworks and the burgeoning crypto market has escalated, with BlackRock, the world's largest asset manager, and the US Securities and Exchange Commission at the center. BlackRock claims that the current regulatory framework, which places a heavier burden on crypto futures, may hinder the broader adoption of these financial instruments. BlackRock argues that the SEC has no reasonable reason to treat spot crypto and crypto futures ETF applications differentially. The company registered the iShares Ethereum Trust as a Delaware statutory trust on November 9th, following Nasdaq's submission of the 19B4 application form to the SEC. BlackRock also registered a Bitcoin trust earlier this year and submitted an application to the SEC for the introduction of a spot Bitcoin ETF. BlackRock raised concerns about the SEC's handling of spot crypto ETFs, claiming that the agency consistently rejects these applications due to erroneous regulatory differentiation between spot and futures ETFs. MicroStrategy co-founder Michael Saylor predicts that Bitcoin's demand could grow by 10x by the end of 2024. The asset has transitioned from an offshore and unregulated asset to an institutionalized mainstream app with monthly demand expected to double or triple. Supply for sale will be cut in half in April, resulting in 500 million Bitcoin available for miners each month. Saylor sees the next 12 months as Bitcoin's coming out party as it graduates from college and enters the real world. Adoption will continue to grow across the tech industry and mega banks, with both sectors integrating Bitcoin into their products and services. Competition will be intense among Wall Streeters, crypto exchanges, and other tech companies, as well as when big mega banks or Bitcoin custodians make loans, give mortgages, customize it, and buy and sell it. Saylor believes that Bitcoin will outperform any other high-quality asset, growing twice as fast as compounding twice as fast as the S&P 500 index or other diversified high-quality portfolios. Bitwise Asset Management, a leading crypto index fund manager, has clarified that it has no ties to the troubled tech startup Bitwise Industries, which is facing legal troubles brought forth by the US Securities and Exchange Commission. The co-founders of Bitwise Industries, Irma Olgin Jr. and Jake Soberl, have been slapped with charges of wire fraud conspiracy and alleged misappropriation of $100 million from various investors. The SEC claims that they went to great lengths, including falsifying documents to deceive investors and secure funds. Bitwise Asset Management asserted their independence from the beleaguered tech firm, stating that they have no relationship with the now defunct Bitwise Industries. The company is renowned for its diverse range of crypto-related investment products, including Ether futures exchange-traded funds, and is actively pursuing approval from a spot Bitcoin ETF. In contrast, Bitwise Industries appears to be a defunct tech company with no history of involvement in digital assets or cryptocurrencies.
A very happy Diwali to all the viewers of 3.0 TV. I am Manoj Dara. For cryptocurrencies, the year 2023 is turning into a huge success with crypto market cap accumulating up to 55% led by the Bitcoin's rally. The largest cryptocurrency by market cap has set the market on fire, starting Diwali celebrations pretty early and probably setting a tone for a Santa Claus rally. As we in India start celebrating the festival of lights, the crypto markets seem to have received Goddess Lakshmi's blessing. Bitcoin has hit fresh 18-month highs, carrying forward the momentum from a recent rally. Giving us his views on the crypto market and the future prospects, we have invited our guest, Mr. Raj Kapoor. Let's hear from him.
Hi Manoj, thanks for having me here. But first, let me begin by wishing you and all my viewers at 3.0 TV a fantastic happy Diwali. This Diwali is different. Last year we had the crypto winter. This year things promise to be a little different. But that optimism has a reason. What's the reasons? First, the increasing optimism around the possible approval of the spot Bitcoin exchange traded funds, ETF products, by the SEC USA. That's one big point. Actually, there is a fantastic 8-day window between November 9th and the 17th where all the 12 Bitcoin ETFs could be possibly approved by the SEC. Now, that was done by an assessment by Bloomberg sometime back and an analysis. Let's see what happens. But I think that's good news for all. Further, nothing is guaranteed with the SEC, we all know that. But it looks like November could go down as the watershed month for the institutional crypto adoption. Obviously, this is a great thing from an adoption perspective and for crypto to go a little more mainstream than it has now. It'll also be a very significant milestone as ETFs have a very crucial role in making crypto investments accessible to a wider range of investors. And that, I think, is really important, especially for financial advisors who will lead to this. And this will lead to basically mass adoption anyways. That's what we all want. Well, there's another reason I don't think so. Bullish sentiments, one side, yes. But there are reasons for bullish sentiments. Most of the digital assets have gone with Bitcoin. Bitcoin obviously has gone up, but others as well. And the total crypto market cap is now around $1.4 trillion. That's a lot, considering we've had terrible times in the last few months or years. With the next Bitcoin halving coming up in the next 5 months, wow, the whole Bitcoin community and the crypto community is waiting for that. All long-term BTC holders, they just decided, we'll hold it. They are really bullish. They're not letting go of their assets, especially the miners who've had a fantastic last three quarter earnings. They have had a good earning, and that's another positive sign, I think. If you also look at the macro level, a lot of data points indicate that the FED may pose rate hikes, which may think of cutting down rates as early as Jan 2024. This is going to fuel the traditional market and cryptocurrencies even higher. And that, I think, is a reason for everyone to be bullish. So this Diwali, let's hope we have the new and next bull run. Till then, Raj Kapoor signing off from here and wishing all of you once again, all our 3.0 viewers and Manoj and your team, a very, very happy Diwali. Thank you so much.
Thank you so much, sir, for an interesting insight into the crypto markets. Now joining with me is my troupe of women anchors, and I'm wishing them a very happy Diwali. Recently, we have seen daily NFT trading volumes reaching a 3-month high, which was at $20 million. The boost in the trading volumes reversed a year-long decline in October, which has increased 32% over the previous month. My colleague Ruchi Sharma joins us to shed light on the recent happenings in the world of NFTs. Ruchi, over to you.
Thank you, Manoj. Diwali is a festival of joy and is an opportune time to showcase your artwork in the real world. Talking about the virtual world, the Web3 space, NFT market is a perfect platform to place your digital collectibles on a display. Interestingly, sales of digital collectibles are surging after many months of decline. According to the blockchain analytics company Nansen AI report, during the last 5 weeks, the NFT ecosystem has experienced a notable surge in sales volume. Nansen noted that NFT sales for the week ended October 9th were at 29,704 ETH, or almost $56 million at the current ETH market rate, in a post on X. Weekly sales volume growth brought the total to 68,342 ETH, or more than $129 million. Over the past 30 days, Blur, an NFT marketplace, has recorded the largest share of NFT trade volume. The data aggregator NFTGo reports that in the preceding 30 days, Blur's trading volume was 161,433 ETH, or almost $305 million. Blur rival OpenSea secured the second position with a trading volume of 52,307 ETH, or almost $100 million.
Overall, NFT market is doing good, right? I categorize them into two different sections. One is the PFP or the JPEG NFTs, and the other is the real world asset NFTs.
Right.
The PFP JPEG NFTs, if you know, there are like the large players, largely driven by Yuga Labs and CryptoPunks and Penguins and so on. So these top projects have actually built an ecosystem around the NFT. But all the follow-on projects that I've come across trying to build a community have not been able to do that, because most of the people who participated in it were not for the community value of it. They were more for the financial and the speculative value of it. So if today there is an NFT which gives a good return, they just jump to one to the other, right? So from a forecast perspective, I would say that the JPEG NFT industry, the top few players will continue to exist. But I do not see any new players coming into this particular space. But we're going to see a new angle to this, right? We're going to see real world businesses. So the likes of, Starbucks and all these players, or it could be a gaming community, it could be a sporting club. So those kind of NFTs are going to see much more adoption rather than the JPEG NFTs alone, which are only art driven, trying to build a community around it. So we're going to see community moving to NFT rather than NFTs moving towards communities. Now, I don't think it is a play around sales or market share, etc. It is largely a play around overall dampening of how the PFP, JPEG, NFT markets have been playing, right? So because there is no trading happening, they try to remove the royalty and try to make sure that volume continues to exist. But there is only so much that you can support a falling market. And that market is, like I said, is going to continue to go down. There are going to be newer avenues, newer markets which open up around PFP and NFTs, which are access driven. But the current OpenSea model is not going to thrive. In fact, just to kind of give a heads up, we ourselves are in a real world kind of a business. And we were talking to one of the top 3 NFT marketplaces globally just yesterday. And they themselves are looking to move away, or at least try to create newer business models around real world asset NFTs rather than continue to only focus on PFP NFTs. Like I said, the market is going to get split into half. One is going to be access driven. The other one is going to be real world asset driven. And real world asset driven is going to get the maximum amount of attention from larger market players, conventional markets as well, right? So that's going to be like BCG predicted. It's going to be like a multi-trillion-dollar industry very soon.
Let's go to my colleague Vishakha Thakur to get an update on Metaverse. Thanks, Ruchi, for giving us a sneak peek into the NFT market. We are celebrating the biggest festival in the country, the Deepavali, in real world. We have witnessed Diwali being celebrated in the virtual world too. Metaverse will open up new horizons for brands, businesses, and the community as a whole. Metaverse initiatives received $707 million in venture capital funding in the first half of 2023, accounting for 44% of all Web3 investments as per a report by Daproda. And now, Metaverse gaming tokens of Gala Games, Axie Infinity, Sandbox and Decentraland have experienced a significant growth recently, with prices gaining as much as 16%. I spoke with various industry experts to understand what is going on in the metaverse sector, and they have provided valuable insights on the rising investor interest in these tokens, as well as some key trends in the Web3 space.
The token. The reason why most of the like Gala Games, if you're talking about. So what happened here is, in the last 3 to 4 months, gamification has improved a lot, in the sense that gaming industry has literally taken up automatically. Yes. And that also because the leaders have come up. And if you look at Sony's and others, they also are now betting on tokens. That's why these startups, these small startups and tokens have really come up well. So because of which, what happened is all of a sudden the gaming industry, the gamification of earned value play. I mean that's the way to say it. Literally took the customer into picture, and now what happened is because you can now earn while you play, and that market has come up well, and that's the reason why you see a lot of token based games have come up. And to play the token based game, you need to have an experiential metaverse system, and that's how everything comes. Last component was which people thought is the enemy of metaverse, but it was the AI. But it is not the enemy. It actually augmented the metaverse to the next level.
See, I think if you look at it from a financial perspective, what crypto has done is basically, especially the metaverse and the Web3 tokens, and especially when we're talking about metaverse tokens, which essentially also provide not just a crypto sort of an area, but also sort of a legitimacy in terms of being backed and used by actual contents and actual experiences. So what it has done is basically it has sort of taken that place which essentially typically was previously being used by gold. So the moment you have a lot of some of these instabilities in the financial markets, especially around dollar and those sort of areas, typically your investments into gold and crypto sort of go up. And I think basically over a period of time, especially around with a lot of uncertainties in terms of things which are happening either in Middle East or in Europe, basically a lot of investment interest and investor interest will essentially sort of move into crypto and those sort of areas. So I do see a very positive outlook. And as I said, basically the crypto now versus the crypto and NFT market, which was earlier, basically now the market is pretty much more sensible, and not just sensible, basically people want to see up values. And I think that's where a lot of these metaverse tokens essentially present up a value to the customer.
Metaverse is the battlefield, and in the battlefield you have few players like AI, gaming, and NFT. So AI helps and integrates a faster user-based experience for metaverse. Gaming is a core product of a metaverse. And if we talk about NFTs, we have seen it has been shaded down. But now investments coming in AI, coming in gaming, and NFTs picking up. So all these three elements will come directly to the metaverse only. And you will definitely see big coins of metaverse with high market value like Sand, Mana, AXS, Alice, RNDR. This all will play a vital role. And I am not surprised at all if you see the scenarios.
As the experts rightly mentioned, the gaming industry is the center of metaverse, and according to a report by Valuates, gaming-led global metaverse market can reach $28 billion by 2028. So let's see what Shikha has to say about the gaming industry.
Thank you, Vishakha, for your in-depth analysis on the metaverse sector. In good old days, about a decade ago, Diwali used to offer an opportunity for family to unite and have a gala of time, celebrate festivity, enjoy food, burst crackers, and play games, mostly in-house games such as Ludo, card games. Now, scenarios have changed. So has the gaming activity. Players can experience immersive virtual worlds through virtual reality and artificial intelligence. This compelling game experience is set to continue in the near future as industry leaders discuss the future of virtual worlds. The video game industry is projected to witness astounding revenue growth, reaching an estimated $533 billion by 2027. It has the potential to a dominant entertainment sector. As per DAPREDA's Q3 report, the Web3 gaming projects raised $600 million, bringing the year's total investment to $2.3 billion. This is 30% of the funds raised in the previous year, but the market dynamics of 2023 are unique. The blockchain gaming sector recorded $739 million in investments in Q3, while the second quarter saw $973 million. Venture capital firms have also invested significantly in the space, indicating their confidence in the future of blockchain gaming. The figure has dropped by approximately 50% since Q3 2022, when the space attracted investments worth $1.2 billion. Despite regulatory heat, the gaming sector has dominated the decentralized applications market. The trend highlights need for adaptability and foresight in this ever-evolving domain. Furthermore, the excitement surrounding a potential spot Bitcoin ETF is not only increasing Bitcoin's price, but also resurgence of interest in blockchain games, according to Yatsu, founder of Animoca Brands. Let us listen in from our guests what they have to tell us about the overall Web3 gaming space.
See, adoption, it's hard to predict like which games would be the one that would be making the headlines, would be making, getting the first billion users or even 100 million of users. But yes, the couple of elements that would play the major role would be first of all would be the gameplay, because to have masses, the masses do not care so much about making some money from the games, but rather, unless it's a betting game, of course. But they want a good game. They want a good, they want good gameplay. They want good mechanics, good aesthetics. So basically, a good game as well as smooth interactions. So rather than switching from one application to another, if everything is seamless, and I think right now the best way for Web3 gaming is to not let the user know that it is Web3 gaming. So this abstraction would be really helpful, as well as identity. So Web3 gaming, how it differs a lot from Web2 gaming is that here people are, generating, first of all, the strongest point is creation of ownership of assets. And that also leads to having a strong identity of the player into the ecosystem, building communities, building ecosystems, building identity, and linking them all with GameFi elements. So whoever does the right balance of these elements is bound to grow, bound to excel. And we are, there are some exciting news recently. Some good companies are coming who have already even in this bear market, they've raised big funds. As well as they're working on some amazing models. So I'm expecting for some exciting times ahead.
While Web3 is a global paradigm, I would say we would expect most of the growth to come in places like Asia and possibly also Middle East. The reason why is not just because people in Asia as a percentage are more gamers, but it's also that the regulatory framework in those countries is much more friendlier. So for instance, if you look at Hong Kong, Japan, Southeast Asia, or even here in Dubai, actually you can see that, regulatory-wise and government-wise, they're very forward. And as a result, people are much more comfortable and they're excited about those possibilities. Whereas in places like the US, for the time being, are struggling with that. Not because they're industry people who really want to push it forward, but because there's regulatory unclarity, because there is certain kind of fear and doubt what's going on. And of course, the recent events haven't been helpful at all. So that's one of the reasons why I think Asia will lead. And by the way, that's what happened with free-to-play gaming. Free-to-play gaming was led by Asia first, before it started taking over the rest of the world. Well, first of all, I think there are many things that make India a very good market, especially when you think also some of the most successful early crypto founders have actually come from the Indian Peninsula. And we work very closely with some of them, like for instance, like Polygon and those guys. Those are a great team. But I would say that one of the differences about India versus other parts of Asia is that the regulatory framework isn't completely clear yet. And I think that's holding it back. And I do believe that if the Indian government actually starts to embrace this opportunity, because one of the things that Web3 is really powerful is to actually bring people from the bottom up. And in fact, from a market standpoint, I would say that India is a perfect market. If you think about what crypto has done for Southeast Asia, or crypto has the potential to do in the MENA region, I would actually think India would have the same potential.
Let's hear it from my colleague Roshni Shingre on the transformative potential of blockchain.
Thank you, Shikha. After an interesting update from gaming sectors, let's do a quick check on technology, which is bedrock of the Web3 space. Yes, you guessed it right. I'm talking about blockchain technology. This PO has witnessed a surge in interest and adopted in India. From finance to healthcare to spacecraft, virtually every industry is influenced by blockchain's potential, be it enhancing transparency, security, efficiency, etc. The growing use cases are instrumental to grabbing attention of user segment cutting across the sector. Not just industry players, many public and private sectors, institutions, state governments are exploring the use cases of blockchain solutions. The Reserve Bank of India is encouraging blockchain adoption in payment systems and guiding banks to develop blockchain application through its regulatory sandbox initiative. Similarly, many states in the country are adopting use of blockchain-based land record system to minimize property fraud and errors. The global blockchain technology market size was estimated at $4.8 billion in 2022 and is expected to reach $2.33 trillion by 2032 at an astronomical compound annual growth rate of 85.7% during the forecast period, that is 2023 to 2032. The global blockchain market is segmented into payments, exchanges, smart contracts, documentation, digital identity, governance, risk and compliance, and other in terms of application segment. The other segment include digital voting, ride-sharing, advertising, and many others. Blockchain helps reduce cost, increases security and transparency, and decreases transaction time while reducing the need for a trusted third party. Blockchain handles a varying set of rules and configurations. Applications such as smart contracts can greatly improve process efficiency, reliability, and transparency and reduce risk. The prospective uses of blockchain are varied and wide, and the technology is becoming more prevalent. Blockchain has strengthened the BFSI industry globally, and it can enhance the infrastructure to deal with issues more efficiently.
The emerging technology like blockchain, it's like a decentralized application, is tremendously rapidly growing, so that, not only in the field of what I can say is only just like a reality sector or a retail sector or a pharma sector. It's been gone to everywhere. Even now, the governments of almost all the countries are adopting blockchain technologies, so that, in terms of non-hacking activity and also more transparency for giving to the customers, a lot of governments are also approaching the blockchain technologies now for a better usement and as a better use. Doing a transaction in the form of a crypto has become very easy, so that, the transactions of 1 million, they can do it in in minutes of a time, with a more better security and having a lot of confidentiality rather than carrying of the fiat currency. So real estate is also one sector which is adopting the blockchain day by day. And coming to the latest trend in the real estate, earlier people used to buy a property with USDT and the Bitcoin. Now a little uphand, a kind of a little development, the tokenization, that means the fractioning of a real estate property is also coming into the place, where a single person used to buy a property in the world until now. Now a group of people, maybe 1,000, maybe multiple of thousands people can invest on a single property. So that's where the fractionization of the real estate has come into the picture. So even that level of advancement has come into the real estate sector.
Technologies like blockchain, which would provide authenticity, ownership, backed by a digital public record, that is going to help. So what is going to happen at one end, as generative AI grows, that technology adoption like blockchain also grows.
Wow, interesting stuff in the Web3 space. I take this opportunity to thank all my guests for providing their valuable insights and enlightening us. Last but not the least, I also thank my colleagues and wish them a very happy Deepavali and a prosperous New Year. Thank you, everyone.
Hello and a very warm welcome. I am Ruchi Sharma. The Web3 gaming industry is projected to be worth $23,000 million in 2023, but the traction has been slower than anticipated. What are the challenges that the Web3 gaming industry is facing, and how can we overcome these challenges? To answer these questions and many more, we have a very special guest with us, Mr. Abhishek Sagar, founder and CEO of Zuraverse. Welcome to 3.0 TV, Abhishek.
Hi, it's a pleasure being here, Ruchi. This is the last video that was covered about Zuraverse. It was amazing, and I'm looking forward to answer a lot of queries and have an interesting discussion around Web3 gaming. Yeah.
Wow, that's great. So let's start. The Web3 gaming industry has been a challenging one for years, struggling to gain trust and overcome image issues from the play-to-earn era, and traction has been slower than anticipated. The question is, what will drive more mainstream gamers to play Web3 games?
Well, the traction has definitely gone down from what it was expected. And how I see the main reason, and also from a lot of other industry experts and gamers themselves, we did a lot of interviews as well. So the major problem of adoption is because of the user experience. So right now, people have to switch into multiple applications, and the blockchain-based transactions, they also take a lot of time. So that is something that is a problem. So right now, what is actually happening is gamers, they had been given a racing cars earlier when they were playing their Call of Duty and Fortnite and all these top end games, and it is getting really difficult for them to switch into something which is slower, has more bugs, is a bit glitchy. So yeah, that is the problem here. So if we fix user experience, so that will solve a lot of problems in the industry.
Okay. So according to you, how big is the Web3 gaming market today, and what matrix do you think works best to track growth?
Well, the Web3 market today is around, it was like you said earlier, it was expected to be something like 23 billion by 2023. But what we have on our hand is a couple of billions, like maybe 3 to 5 billion. So we don't have the exact numbers. But yes, it's not more than 3 to 5 billion US dollars right now. And so the reason I would say, and it is like, just around 2% of the whole gaming industry. The whole gaming industry is around a market of like 230 billion right now, $230 billion. So Web3 gaming is still around 2% of what Web2 gaming, like the gaming overall is.
Right.
And the major reason of it is it's young, it's very young. So we are in baby steps of Web3 gaming. But you asked, like, how are we going to drive traction towards into Web3 gaming, right?
And how do we measure that growth? What are the best metrics to know the growth? Is what the question was.
So the best matrix for growth right now, what we are seeing after seeing so many projects, in the last couple of years. So I would say the best matrix is revenues. Best matrix is revenues, like how much revenues are these games making, and of course the second one is number of active users. So these two are the best matrices, because other things like getting NFTs minted or on-chain transactions, they do not give a clear picture of how much users actually engaging into the games. So yeah, revenue and active users.
Right. So what are the biggest challenges Web3 gaming is facing in terms of adoption from both gamers and traditional gaming studios?
Yeah, so like I said, gamers, they want good game, period. They want a game that they can enjoy.
Right.
That is about the masses. Of course, we have seen a lot of boom in the play to earn area. People who have been into play to earn gaming, they have adopted a lot of crypto games. But to have a mainstream adoption, we need good games with a smooth flow. Like I said, user experience, and user experience would come in front of these games, as well as gameplay elements, innovation, and some innovative ideas around GameFi would definitely be like a cherry on the cake.
So what do you predict will happen to the play to earn model over time? What other Web3 gaming elements will the industry shift towards?
So yes, there have been a lot of problems with play to earn models in the past, because till now we do not have a 100% sustainable play to earn gaming model, because usually the models, they give a lot of rewards to the player in the beginning, and in the end, by the end, the rewards really trickle down to mere pennies, and that is why there is a lot of distrust in this area. So how I see is, if we can make models, those are close to real money gaming. So real money gaming itself is now like $1 billion industry. Even in India, we see a lot of games, although the government has imposed a tax of 28% recently. Even then, there are big companies like big games like Rummy Circle, Dream 11, just to name a few, who are doing amazing. Vinzo. There are so many real money gaming applications that people are adopting to, and millions of players are playing these. So if there is adoption there can definitely be adoption in the crypto space as well. So there are two things. First of all, there has to be some certain rewards other than just staking and banking on the future rewards, rather than having some rewards which are instant or at least short-term rewards, so that player can get them before the value of any volatile cryptocurrency drops or rises too much. And the second thing would be having a model close to some real gaming models as well, real money gaming, I mean. And yeah, some innovation can definitely happen, which can match both some staking powers as well as some instant rewards. So that will give a nice balance to the whole gaming scene.
Great. So talking about adoption, what type of Web3 games do you think will see the most adoption going forward? How have your expectations changed over time?
Okay, yeah, that's a good question. So, see, adoption, it's hard to predict like which games would be the one that would be making the headlines, would be making, getting the first billion users or even hundred of million of users. But yes, the couple of elements that would play the major role would be first of all would be the gameplay, because to have masses, the masses do not care so much about making some money from the games, but rather, unless it's a betting game, of course. But yeah, they want a good game. They want a good, they want good gameplay. They want good mechanics, good aesthetics. So basically, a good game, as well as smooth interactions. So rather than switching from one application to another, if everything is seamless, and I think right now the best way for Web3 gaming is to not let the user know that it is Web3 gaming. So this abstraction would be really helpful, as well as identity. So Web3 gaming, how it differs a lot from Web2 gaming is that here people are generating, first of all, the strongest point is creation of ownership of assets, and that also leads to having a strong identity of the player into the ecosystem, building communities, building ecosystems, building identity, and linking them all with GameFi elements. So whoever does the right balance of these elements is bound to grow, bound to excel. And we are there are some exciting news recently. Some good companies are coming who have already even in this bear market, they've raised big funds. As well as they are working on some amazing models. So yeah, I'm expecting for some exciting times ahead.
Right. So what advice would you give other gaming developers for gaining traction and standing out in the space?
So if anybody is a game developer, whether indie or if they're a studio, so my advice would be to focus on building good games and having good user experience again. But yes, that is what is the biggest challenge of the industry. But now, thankfully, a lot of us have fixed that. So I would say use those platforms, such as even we have built our own SDKs because we've been in the industry for over 1.5 years now. So even we have built infrastructure that could support gaming studios to build their own games. There are other players like Link World, Third Web, and to name a few, there are even more. So they can try out these platforms and use them to integrate NFTs or tokens into their game. But what is most important for the gaming studios is to build an amazing game and then link it with the Web3 features. That is something that can definitely work out at this point.
Right. So Abhishek, how could traditional and Web3 gaming studios work together more closely?
Well, yes. So there definitely has to be a collaboration between Web3 gaming studios as well as the traditional gaming studios. And so, like I mentioned, that we are building SDKs as well as other infrastructure companies are also building their SDKs that would allow easy onboarding of Web2 game developers or Web2 studios into Web3. So first of all, but I think to reach there, we need good awareness. So a lot of people, in the gaming industry who are my friends, so they're still not very positive about Web3 gaming or blockchain gaming, crypto gaming, however you may call it. So the reason being all the negative sentiments in the market. So the first of all, what is important is to to build this awareness. And once we build this awareness, like how powerful is Web3 gaming, how it is democratizing the gaming industry in itself, then it becomes easier for them to explore ways and yeah, if they have like more information, like I said, awareness about DeFi, GameFi, and what they can bring, like how can they create economics within a game. So that would really empower gaming studios as well. So not only on infrastructure and software level, but there is also cooperation needed on educational and awareness level.
Right. So we know that Web3 gaming is going to be very big. It's going to grow exponentially. Which regions or countries will be at the forefront of Web3 gaming adoption in the next 5 years? Where will it take time to gain traction, according to you?
Yeah, that's a good question. So how we have been seeing the market, that Southeast Asia and even parts of Africa, and so emerging like developing countries as well, they have been really well in adopting the crypto gaming so far, and that is because of the money wave. Basically, they were able to earn a lot of money from the cryptocurrency based games. But the next wave of the games, of course, there would be these players who have already been into the Web3 gaming scene. But the next wave, I believe, is coming from Korea, from Japan, if we talk about Asia, and of course United States as well, because a lot of companies are like big investment firms have been investing a lot of money, and some big so Korea is, I'm really bullish on South Korea, because there have been some recent developments. A lot of big gaming companies have entered into the Web3 gaming scene, as well as Japan. Japan has been doing really good. So yeah, like farther east and farther west. So United States and like South Korea and Japan, I think they're going to lead the next wave, and Europe probably, Western Europe probably would follow a bit later, because once it becomes more mainstream and all the major studios, when they come down into the market, then probably the European markets would follow as well. UK would probably follow a bit earlier than the rest of Europe.
So we have covered most aspects of Web3 gaming. Now talking about the broader Web3 industry as a whole, though India is among the top Web3 adopters, regulation in this space is still nascent. How India can emerge as a leader in the cryptocurrency space, and what does the global outlook of the cryptocurrency space look like in terms of regulation?
Well, yes, it's a very amazing thing, and very ironical, but at the same time. So like the pace of adoption in India is around 29%, which is the top of the whole global scene. But at the same time, we also have one of the strictest regulations in the world, which was actually necessary at that time, because the government was unaware like how to deal this situation, how to regulate these cryptocurrencies.
Right.
But yeah, what is needed is more fairness and transparency in the regulation that are being made, as well as onboarding some of the well-known people from the crypto industry into these regulatory bodies, so that they can put a right decision. They can help put forward a right decision. So that is very much needed, because there is lack of knowledge globally around the impact and around the consequences of how cryptocurrencies can impact an economical model. So yeah, that is the best way forward, to get experts on board, experts who are into the crypto industry already, get them on board, and with their help, form a transparent model that everyone is happy with. No one is here to to evade taxes.
Right.
Like the serious people, they would definitely want to give taxes, but the taxation should be transparent, should be fair. Basically, it should be fair.
So Abhishek, Chain Analysis, a crypto research firm, has found that lower middle income countries are leading the global adoption of cryptocurrencies. According to a report evaluating 154 countries using a global crypto adoption index, India emerged as the top country, followed by Nigeria, Vietnam, US and Ukraine. What is the rate of adoption in crypto?
Yes, so there is a reason why countries who have a weaker currency compared to the US dollar have a better adoption rate for crypto and that is because they needed an alternate source of currency, alternate mode of currency, because it's always their own native currency has been getting depegged when compared to the US dollar. So there has definitely been, that's why the adoption in whether it be India or some African countries, there has been more adoption. And the second thing is the tech. The awareness around tech. So I would say in India, at least, that is the reason that people are really they really took deep interest in cryptocurrencies. And so fortunately, that again is a reason why it worked out so well for India. But whether it be El Salvador or any country from South America or from Africa or from the Southeast Asia, so wherever there is, I would say, there is devaluation of their native currency, there would be more adoption of cryptocurrencies.
Right.
And this adoption rate definitely would reach out in developing countries, developed countries as well, such as European countries. US definitely has a good adoption rate because most of the people who have done massive investments in Bitcoin have been there from the United States, and I see that as a major reason why US is also there. But yeah, so it's all about the I would say the native currency, like how the native currency is performing.
Great. Thank you so much, Abhishek, for giving us your valuable time and for having this conversation with us. It was really a pleasure having this conversation with you.
It's my pleasure as well, Ruchi. It's great to discuss around such important and interesting topics with you.
Thank you so much. With 3.0 TV, stay connected with the world of blockchain. Stay up to date with infinite world of NFTs. Come explore and evolve with 3.0 TV in the metaverse.
So many coins, so much volatility. 3.0 TV delivers the news that matters.
Hello and welcome to 3.0 TV. I am Vishakha Thakur. The evolution of metaverse will open up new horizons for brands, businesses and the community as a whole. According to a report by Markets and Markets, the global metaverse market is projected to reach $426.9 billion by 2027. Metaverse gaming tokens of Gala Games, Axie Infinity, Sandbox and Decentraland have experienced a surge and significant growth recently. So to discuss in detail about what exactly is happening in the metaverse space, I have been joined by Mr. Akhil Damodaran, Dean IILM University and CEO of Ethereum. Welcome to 3.0 TV.
Thanks for having me. Thank you.
So, Mr. Akhil, you may be aware of the report from DAPRADA that shows in the first half of 2023, metaverse projects attracted investment from venture capital firms totaling $707 million, representing 44% of all Web3 investments. So, your opening remarks on the current scenario of metaverse market.
So to be very frank, Vishakha, let me answer this question in one way, that the major surge for the metaverse trend to come back again, which is very happy for me, that in the last 6 months you saw a lot of metaverse trend coming up.
True.
I want to thank largely first thing to Apple, because to be very frank to you, when Facebook came out with Meta, Apple and others were some of the competitors who really did not bet on metaverse, and that's also one of the reasons why metaverse was looking like a phase. But then now when the Apple Pro came in and then Facebook also came out with the Quest 3, and somehow the metaverse market came out again. See, the world works that way. The leader has to start. So the leaders are Apple and Facebook, and they both betted well, and they have shown the kind of graphics and the spatial experience. Even if you look at Apple 15 Pro and the Pro and the spatial glass which they have come up with, the video making and everything is looks like exactly that the future exactly will be in metaverse. I mean, they are trying to build up the audience for it. I mean, that's why they have come out with these aspects. Second very important point is the token. I mean, the reason why most of the like gala games, if you're talking about. So what happened here is in the last 3 to 4 months, gamification has improved a lot in the sense the gaming industry has literally taken up automatically.
Yes.
And that also because the leaders have come up. And if you look at Sony's and others, they also are now betting on tokens. I mean, that's why these startups, these small startups with tokens have really come up well. So because of which, what happened is all of a sudden the gaming industry, the gamification of earn while you play. I mean, that's the way to say it. Literally took the customer into picture. And now what happened is because you can now earn while you play, and that market has come up well, and that's the reason why you see a lot of token based games have come up. And to play the token based game, you need to have an experiential metaverse system, and that's how everything comes. Last component was which people thought is the enemy of metaverse, but it was the AI. But it is not the enemy. It actually augmented the metaverse to the next level because now, especially after Nvidia came out with Omniverse, I mean that's the word to it. What happened is now they have integrated AI as a part of a customer experience inside the metaverse. The consumer can talk to the AI, get the problem solved,
Right.
get the experience inside metaverse. You feel like human society inside. I mean, that's where it is coming out to be. So to be very frank, now I'm very happy to see blockchain, AI, metaverse coming together. And metaverse is the platform on which this is going to be. And that's what people start believing in it. That's the reason you see a lot of investment coming in. That's the summary take I would say.
That's great. So Apple and Meta led